RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. This is our report. Where are we here? We are for 23rd of April, Tuesday. Happy Pentecost Day. Actually, we have the TRI CTO on the call here today. So actually, he just had a trip halfway around the world, and he is back in the saddle. So it should be really cool to hear what is on Sjoerds' mind today. Sjoerd, are you here today? Are you ready to do this thing for these good people?
Yeah, I'm ready.
There he is. So won't comment about dashboard. We'll leave that up to Sjoerd. What I guess we'll pop on over, take a look at what's going on in the world here today. Our 15-minute report, just want to give you an overview of what I'm seeing in the market for whatever it's worth. And then also maybe throw in some Econs, and also too, I think I told you I actually went and bought a little gold stock yesterday. So I actually have been doing something in the market. And we do have a couple short demo trades going on here in the Bitcoin market. So probably not a bad idea to check in on that. And then we'll head on over to the after party. So first things first. As you can see, risk assets actually feeling pretty good here this morning. Bonds got a huge boost, which is interesting because they got a huge boost on what I would actually consider a relatively kind of sanguine economic report. Certainly nothing for you to go, wow, that is a bullish economy. Look out. We're going to the moon. Anything almost the exact opposite. So we had S&P Global Composite PMI. Oh boy, there's a mouthful. Still don't quite understand what the whole global about all this is. PMI stands for Purchasing Managers Index. So this would be sort of like the business side of the world. And then you have like consumer indexes, things like CPI and stuff like that, measure the consumer's health. So all in all, looks like the readings out of, I suppose, Western Europe, Great Britain, came in relatively positive on an uptick. But then you look at the US data, it actually came in on a downtick. And 50 is supposed to be sort of the magic number, expansion versus contraction. You can see that everybody was looking for a slight expansion. And we did get this slight expansion in things like the composite. You can see services index slightly expanding, but manufacturing sector in the United States now actually technically slightly contracting. And when you read through the actual sort of, the write-up, I mean, we don't really have a new M or a new W on the data set today. So it's nothing that's really going to sort of like rock the world. But, some of the talk in here really isn't like overly bullish. Well, and the thing that caught me, and I think what most people are interested here in the short term is, of course, the inflationary pressures. And on the price front, both input costs and output costs charges rose at a slower rate, but they still rose, but remained high overall. So, it's not exactly like, all right, inflation has been beaten. That's sort of like just hurry up and go nowhere. I think probably what's going on here with the risk assets vaulting higher as they are, including Bitcoin, is if we look at the actual indexes here, right? This is the ES, and we just basically fell off a cliff. And the year-to-date performance, we backed up into good old Colin and his pump chaser zone. And then we put in a little 3-bar fractal there yesterday. And that 3-bar fractal is now fired today. So it feels to me like what's ending up happening here is this is the classic dead cat bounce. So we had a big thumping. We bounced. You can see 13 EMA on this daily ES chart. is basically where we are right now. And that is now into the dump chaser zone, right? If we were going to put pump chasers, 50% levels come in, and now I think we're probably going to have a nice tag of that 50% level. Maybe even if we're lucky, a revisit of this downtrend line and a revisit of that 30 SMA to the upside. That's what it kind of feels like going on. I suppose you could also argue too, there's a whole bunch of trap bulls in this wick right up here, and they would love nothing more than to try and get released. I think you could also make the argument that the original market structure fail level is that level right there. So interesting how that lines up with the 30 SMA, with the downtrend line. And like I said, those all those trap bulls in there, they would probably be net sellers if we can get back up into there. As well, things like the NASDAQ, we talked a little bit about this. I mean, I hate to say it, but month after month, quarter after quarter, year after year, we keep seeing the same thing over and over and over. So I think what happened here, of course, is we had the big April options expiry there on Friday. Market got absolutely decimated, huge outside downside reversals, darling stocks like NVIDIA, of course, beloved Bitcoin, looking very heavy. A lot of the altcoins. In fact, actually interesting when you look at the Bitcoin price chart, this is like a triple top. Interesting though, we do have a rule at TRI that says we don't really get a sell signal until we actually get market structure signal on the other side of this trend line over here. So you can see how they've recaptured this trend line. Feels to me like we're right back into this trading range, and you might even argue that we're basically sitting in the middle of the trading range. And if we look at things like market darlings like NVIDIA, same sort of kind of conversation, big breakdowns here. The semiconductors really took it on the chin. I mean, you can see the size of the price gap on this chart. That should be filled in at some point down the road here. But at the same time too, I mean, the trend is your friend until it isn't, and all that kind of conversation. I think you can actually make the argument based on this market structure fail here. I actually think there's like two trend lines working here. So the first trend line, this probably won't get breached anytime soon, this trend line way up here. I could see them go after this trend line. Actually, this would be interesting, whatever the highest high is, 907.39. Yeah, so it is that high there. And I think that's what they're doing here right now. Kind of like what we talked about there on the ES. I suppose you could argue the same thing with the NASDAQ. Big gap, talk about a whole bunch of trap bears, right? Market structure fail level. Inside bar that fired basically first thing this morning, and we are now climbing the wall of worry, probably back into resistance here, fill the gap in, probably simple things like good old Colin's dump chaser zone. Where is Colin? There he is. Yeah, what a surprise. I mean, this stuff after a while gets so cliche, it's ridiculous. So I get the distinct impression that we have a date on things like NVIDIA up top here. And then as we said on the NASDAQ, or actually on the ES, we're coming up into these levels now. And on the NASDAQ, actually, we probably could work a bit higher here. Hey, there you go. So I wouldn't even be surprised, to be honest with you, the NASDAQ actually comes back and revisits that key reversal fail level up in here. And I suppose you might argue too, while we're at it, we can throw on downtrend lines. Boom, there you go. So, major resistance on this thing is way up here. So back and forth, up and down, like what. Probably to that end as well. I don't see any reason why we wouldn't, and especially considering we were looking at that ETF there just a second ago on Bitcoin. I think Bitcoin's probably doing the same thing. We're just going to dead cat bounce right back into resistance here. We've got some pretty juicy tail action there that was left last week, and we have huge wick action that was left from the week prior. So you could make the argument that we probably need to come back up and, candle body highs for trade location, so you can see where my little squiggly lines are here. I would not be surprised if we see the market work its way back up top here. If we look at the lower time frames coming out of the actual halving event, I think we had a bullish setup that did develop following that event off the lower time frames. There it is. So this is off of the cash market. We were also following it on the futures markets. I think, probably most of this audience focus in on the cash market. You can see the double bottom. We kind of talked about this, coming out of the halving event. We had a bull bear battle line set up. If we went up through the high, then odds are that we were going to, do a bull ABCD, which should technically take us all the way up into, you can see bull move objective up here. And that's, that's a bit of part of $69,000 on the spot market. Bot trading rules. It's not a bad idea that if you do have a trade that works in your favor, and I think you got a half decent buy signal there, 64,300 area. Move your stop to scratch. If we hit this 65, 66, we'll call it in here. Indeed, once we did hit that level, we haven't looked back. Move stop to trailing. So notice that once we get up into here, those people that are aggressive in wanting to take profits, we did have a cute little M that just came in here. I wouldn't fault people who are just, kind of chicken shit, just like, hey, there's an M, get me the hell out of here. I just want to take profits, or maybe even take part of the trade off. I suppose it probably makes more sense, more conservative. Keep in mind, this is 30 minutes. So we are really talking about sort of like day trader, swing trader kind of talk. But that does make sense. If we go and M out through this level here, then I think probably the bull's done for the time being. Don't really see that just yet. Looks to me like we're in a bit of a trading range here. And considering our conversations about the higher time frame charts on the stock market, geez, everything feeling super uppy. I was actually a bit surprised to see how uppy the bond market is, because keep in mind, this is probably the number one thing that's on everybody's mind. What are interest rates going to do? Dun, dun, dun. And also interesting too, kind of supporting this whole sort of risk on kind of reflation of the world economy, if you will. Notice the good old US dollar here, the index is actually gone and M'd out. And if this M is legit, 2.618s down in this area, 4.669s bring us all the way right back down to the lows that we saw there back middle of March. So fascinating, right? That in itself should be very cautionary for the cautionary camp. This should actually be very, hey, that's a risk on signal. Let's rock and roll. So well, we'll see what happens there. This also might be, though, a proxy on sort of the North American market and his capital continuing to flow into North America in a weird sort of way. And I think we saw that, and actually we have Sjoerds on the call. You see that the euro is getting bid up here. Swiss franc's getting bid up. Hell, even the commodity currencies are getting bid up here. So this might, again, be a risk on kind of market state here. Maybe it's a little less to do with the US, but, remember, if we just circle back and look at that economic data, remember just even today, we saw data coming out of Europe that was relatively expansionary. Ironically enough, British manufacturing not doing so hot, but the services sector seems to be still expanding and well above that 50 level, but the North American, the US data kind of floppy. Interesting too. I am hearing actually talk that China's trying to sort of stabilize a bit. And actually, I think Sjoerds, maybe we'll even take a look. I know he's been a real big fan of things like Alibaba and stuff like that. So maybe we'll take a boo, see how those China funds and all that kind of stuff is going for, and Alibaba's going for Sjoerds. I'll leave that commentary for his report when we get going in a second. I think probably the only other thing that I'll touch on before we finish off here, this free broadcast. What time is it? Actually, we're a bit early here today. Well, I guess there's a couple things. Number one, the gold market snapped back smartly. So as a result, and of course, I'm still pretty sanguine on my good old Canadian banks. But these gold stocks that I was interested in yesterday, I mean, this thing's not trading much volume, but I do kind of like coming in here, doing a little bit of nibbling against the bottom end of the range in the gold sector. And of course, this is the one that I said that an old relative of mine, ironically, Rob McEwen, founder of Goldcorp, he took a fairly sizable position in this little thing. So I wouldn't necessarily pound the table, but I'm a cheap ass. I like to buy stuff cheap. So it really shouldn't surprise anybody to see something like that. And I did have sort of I beg your pardon? Oh, okay. Actually, yeah, yeah, you know what? I think I'll probably leave the stock commentary at that. Like I said, we'll circle around. We'll talk maybe a little bit of China stock with Sjoerd in the after party. Suppose looking at some of Sjoerd's crypto names as well. Are they firming up? I still don't really have a lot of reason to get overly bullish here just yet, but it'll be interesting to see. In fact, what I'd really like to do is get over to his report and hear about how that experience in where'd he go? Dubai, I think it was. How that went for Sjoerd. I'm still on the fence as to whether this stuff is actually really bottomed yet or not. Like this was a name that was asked just the other day. You can see there is a little bit of an inside bar reversal, very much like we're seeing across the stock market. And a lot of these names, you can see on this RUNE, we even talked about this the other day, as potentially inside bar. Of course, you can't really see that chart very well. But is this thing trying to put in a bottom? So I don't know whether I'm totally comfortable considering seasonality and that kind of stuff, getting too uberly bullish about the crypto market just yet. What I wanted to finish this report on with, and like I said, we'll pop on over and hang out with Sjoerd a bit, is just take a look boo at the total market cap here. So keeping in mind, and we are still technically in sort of top ends of ranges. Yeah, kind of sloppy tops here. We did have a double top that came in, you can see, but they went and busted it and took it to new highs here just slightly, and then put in this huge double top. Very much like the NASDAQ and like the ES, like we saw, they are climbing the wall of worry right now. I think they're climbing back into resistance. And I suppose if you're, well, yeah, I think that's about all you can say here right now. One thing I would say is that higher highs and higher lows defines a bull. We did have a situation where an M came in, but I would have liked to have seen them take out this low here and close below that low for us to actually officially have rolled over. So I think very much like the Bitcoin ETF that I showed you earlier, like the NASDAQ, like the ES, I think this total crypto market cap is just sitting in a trading range right now. And, let's call a spade a spade. I mean, the market will do any old damn thing it wants. So, if this thing is still a bull, we've gone through a consolidation period, which is good. I really dislike when I see the public get just absolutely uber insanely bullish when we have these big, insane pushes straight up like this. So just the simple fact that we have done some consolidation means that we can actually do things like start talking about bot setups, and is this a trend continuation trade? I mean, you just don't know in this game. So you just got to roll with the punches. We have done 33% correction. We have not gone beyond 66 of this particular range. So if you are a bull, you just got to trade your setups and live with the results. Try and manage risk. That's probably the most important thing. And oh, what a surprise. The current counter trend rally is back to our 25 level. Oh, what a surprise. Remember we talked about how the NASDAQ and the ES and stuff, they were running into these moving average resistance levels. I get the impression, maybe we say one low, I don't know, two lows. If we can get a nice pullback here, maybe even get a nice tight little W that comes in somewhere along that trend line, that would be nice. Something along those lines that might actually set up a new leg higher. I don't really like the trade idea, but at the same time too, it wouldn't shock me in this crazy ass world that trend continuation patterns happen and we go to new highs. You just got to live with the results. And speaking of which, like we said, we do have this sort of free short working here on the Bitcoin futures. This stop, this is the second part, right? The trade was put on here, took half of the trade off at 2-1, and we're just riding the free position, stop sitting at scratch. If they want to run this thing up top, and you can see this is just the bot objective alone, that would actually still keep you in this short. But if they want to run this thing up, then boom, I'll get stopped at scratch on the remaining of this position and we're done. It is interesting on this chart how we have not hit that move stop to trailing level yet. And you can kind of see the market's kind of waffling here. So if the futures markets break down and we start heading through this level here, then I'll know that those futures boys probably want to hop off, and they'll just walk away from this trade at scratch. So if anything, probably better. Futures guys get run out at scratch. We don't really care about them. Spot market people are trading the cash market. If this M does come in, that's that same sort of M you saw in the futures chart. I mean, if this M does come in, probably because they had moved stop to trailing level, they should probably book those profits and just be happy. And that's sort of the state of the market. I see right now, specifically, we're in a trading range. You'll know that where the bull is firmly back in control and we're rocking higher. If you see the spot market trading above 67.2.5, we'll call it. And you'll know that we've done some serious technical damage. And even more importantly, if we start seeing prints and closes below these lows, and we'll call that 65.7. If you see that move, that does confirm this double top, but it also breaks that bullish structure that's been working for a while. Okay, there's your summary for Tuesday. I hope you enjoyed that. We're going to head on over and hang out in Panacook land for a bit, and talk a little tech with Sjoerds, and also maybe get a report from any exciting stories that he ran into there over in Dubai. And then we've got level 3 class shortly after that. So I will be busy all through today. So have yourself a great day. PMA for the win. Slow and steady wins race. Don't take no win niggles. Remember what you want. And bye for now, folks.